Hello everyone, welcome to the Equity Rich Trader channel. In this video, we will be decoding the IPO investments. We will see should you apply in the IPO or not. We will also have some of the frequently asked questions and their answers. And as usual, we will end the video with learnings about the stock market. So let's get started. The disclaimer, please consult your financial advisor before investing. This video is only for educational purpose. We are sharing some educational content so that you can make informed decisions. So what is IPO? IPO stands for initial public offering. These are introduced by already established companies who need money to run the company, or there are people who have started the company who are called as initial investors and now they want to materialize their profit, like they want to sell their shares and they want to come out of the company, or they are just reducing their portion of the investments in the company. This also helps in branding of the company through IPO. Sometimes it happens that we have not heard of the company, but when IPO comes, there are a lot of researchers make videos on the products which are made by the company, their business style and their way of work, their financials, everything is analyzed, and then these are telecasted on televisions. The IPO ads are also sometimes published in newspapers and so on. The distribution of IPO generally happens that 15% is reserved for HNI category, which is high net worth individuals. These are the people who invest more than 2 lakhs. 35% is reserved for the retail individual investors. The amount of investment is generally less than 2 lakhs. In such type of regular IPOs, which are not SMEs, the IPO amount ranges somewhere 14 to 15,000. Then 50% is reserved for qualified institutional bidders, that is QIBs. These are the mutual fund managers who are managing big funds. Now, what are the prerequisites for IPO applications? Like what you should have in order to apply for the IPO. So the first thing you should have is savings account. The saving account is a deposit account where we can deposit our funds, and on that we also earn interest, although that is very less, but we do get interest, and we can withdraw our money at any time. So we can say that funds are very liquid in state, right? We can deposit whenever we want, and we can kind of get the money out of our account whenever it is required. The second thing is you should have dematerialization account, which is generally called as demat account. This account is necessary to hold financial securities in a digital or electronic form to sell and buy the shares in stock market. This is some interesting fact on IPO subscription and listing gain. This data is from 2007 to till date. We have referred to Chittorgarh graph which is shared on their website. So we can see that Latent View Analytics Limited was subscribed almost 320 times. This is Pars Defense and Space Technologies Limited. It was subscribed around 300 times. So that is the oversubscription status. That means for one share or one lot of shares, there were 300 people who wanted that lot, right? So we can see the demand was very high, and this directly has an impact on the listing gains also. We can see that Latent View Analytics was listed as 169% of the gain, and then Pars Defense and Space Technology Limited was listed as 171% gain. That is huge. And as we go downwards, we see that Tega Industries Limited was subscribed around 200 times, and that also has an impact on its listing gains. and for Tattav Chintan Pharma Chemical Limited, this was subscribed more than 180 times, and its listing gain was 95%. So this has a directly impact. There comes the concept of demand and supply. So if demand is high, then obviously the listing gain will also be high. Now let's come to the frequently asked questions. The first question asked is how long it take for IPO allotment process. The approximate duration is allotment is done in 5 days, refund initiation is done in 7 days, and listing in 10 days. So this is so of 10 days almost we can see. Within 10 days from the date of application, everything happened, whether you are going to get the IPO or not. If not, then you will be refunded your amount, and if you are getting that, then the shares will be credited into your account. For example, recently we can take this example from DCX Systems IPO. This was opened on 31st of October 2022. The closing date was November 2, so almost 3 days were there for applying into this application, and the allotment to be done was on 7th November. If you are not getting the shares allotted in your account, then refunds will be initiated, and you will get those by 9th November. Then shares will be credited into your account on November 10th, and this will be listed on November 11th. So there we can see almost 10 to 12 days, so right. And one important thing to note is that when your funds are blocked into your savings account, you continue to get interest on it. Yes, that is correct. You continue to get interest on the amount which is blocked into your account in case if the shares are not allotted to you. The next question is what happens to blocked money for IPO application? If you are allotted IPO, it gets deducted from your account as we have already discussed. If you don't get IPO, it is released to you within 10 days from the date on which you applied for the IPO. And the important parameter we have already discussed, that you continue to earn interest on the blocked amount. The next is what is valuation of IPO? This depends on demand and supply. If the demand is high, then the valuation of the IPO is also going to be high. But there are other factors also which have an impact on the valuation, such as the business of the company which is coming with the IPO. Then also investors look at the future growth potential of the company. They see their profit and loss statements, and also their forward looking statements, like what is the motive of the company in coming future, and also the industry shift, during the COVID-19 times, all the companies which are in the business of health sector, they were having their shares like booming. They were all kind of rocket, right? So that also have an impact on the valuation of IPO. But we have to be cautious that sometimes promoters get greedy. They just want to make as much money as they can from the retail investors, and they simply dump their loss making shares on us. So we have to be cautious about that. So we should make a good decision by reading all the sources about the valuation of the IPO. The next question is why IPOs are applied in lots and not per share. This is because the administrative cost for company is high for managing a single stock. You can imagine if I apply only for a share of 300 rupees, right? For company, the management will become very tricky. They have to invest a lot of money on just management of the applications. But once the stocks are listed into the market, we can purchase single stock also. Now it's upon us, because we are paying for the demat charges which are being managed by our broker, then CDSL or NSDL, correct? The question is should I invest for listing gain? Yes, why not? There is nothing wrong with it. you should apply if you see that prospectus as good, and you see that you can get 30, 50 or 80% listing gain itself. So just you invest in it, and when the stock is listed, get out of it, take your earned money with you. That is completely fine. However, it is suggested that if company fundamentals are good, you should think of long term holding of the stock, right? This is to take most of the compounding effect. Is share market gambling? So the answer is no. Share market is informed business, not a speculation or gambling, provided you are aware of the risk associated with the equity market. You you can convert the risk into opportunity by taking informed decision. For that, you have to read a lot, you have to know the market, you have to know the shift of the industries, whether they are cyclic, whether they are throughout the year their production continues. So those type of things you have to be aware about. And there is a fact that countries with strong GDP also has strong stock market. You can take example of China, then European Union countries, and now India also. As our GDP is growing, our stock market is also getting stronger. So this is certainly not a gambling, this is a business. How to make informed decisions? There is no shortcut to this. You really need to read a lot, and if you don't want to read a lot and still want to invest into the equity market, you can take help from someone who is a professional in this field. Remember, you are investing, or even I can say playing with your hard earned money. The mantras to success in stock market is informed decisions and be patient. Keep patience. Now coming to the today's learning. So this was the question we had asked in our previous video. What is forward looking statement? So a forward looking statement predicts, projects, or uses future events as expectations or possibilities. Company give forward looking statements by looking at the future business prospectus of their company, the geopolitical events which are expected to happen, and any other kind of shift, gradual or any fast shift whichever might happen in the GDP or policy making of a country. So all those things are considered while making a forward looking statement. These statements are based on management's then current views. That means when the forward looking statement is made at that time, what was the view of the management. So based on that these are made, and assumptions are subjected to certain risk and uncertainties that could cause actual results to differ from those projected. Okay, if you want to watch the previous learning question, then you can refer to the previous video on this channel. Now, as usual, coming to our question for viewers, what is the compounding effect in stock market? The detailed answer we will give in our next video. Do like the video if you are liking the content, and do comment on the question which is asked, compounding effect. This is very important thing into the stock market. And if you are liking the video, share it with your friends, family members, whoever want to learn about the stock market, and hit the subscribe button. So with that, I would take your leave now. So let your money work for you. With that, thank you very much from the Equity Rich Trader. Keep growing. Bye bye.